Welcome to Explain the Charts. Today we are dissecting Intel Corporation, currently trading under the ticker symbol Intel. The current date time is March 23, 2026, and the semiconductor market is currently a whirlwind of strategic pivots and heavy volatility. We have a lot of ground to cover today, starting with the latest headlines that have been moving the needle for this tech giant. From massive institutional stake increases to game-changing partnerships with Nvidia, the news cycle is incredibly dense. However, the stock price has faced some serious hurdles recently, particularly a sharp sell-off that occurred just last Friday. In this video, we will bridge the gap between these current events and the actual price action on the charts. We will look at support and resistance levels that could define the trend for the rest of the quarter. Whether you are a long-term investor or a short-term trader, understanding these dynamics is crucial for navigating the chip sector. Let's start by looking at the fundamental catalysts that are currently driving the narrative for Intel. Looking at the daily chart over the past year, we can see the broader trajectory Intel has taken. Intel has been working hard to revitalize its manufacturing through the Intel Foundry segment, which is a major part of its long-term bull case. Recently, news broke that Intel Xeon 6 processors will serve as the host CPUs for Nvidia's new DGX Rubin systems. This announcement at the Nvidia GTC 2026 conference initially sent shares higher as it validated Intel's role in AI infrastructure. Additionally, Intel launched its Core Ultra 200HX Plus mobile processors just last week, targeting high-performance gamers and creators. We are also seeing significant institutional interest, with Nordea Investment Management boosting its stake by a staggering 550%. On the flip side, some analysts are labeling Nvidia's recent deal with Meta as an Intel killer, which has created some market jitters. The broader semiconductor sector has been volatile, with rising oil prices and geopolitical tensions adding pressure to tech stocks. We must also consider the bearish thesis, which points to Intel's high inventory levels of over $11 billion and struggling yield rates on the 18A process. These mixed signals are clearly reflected in the price action we are seeing as we approach the end of March. The daily candles show a struggle to maintain the momentum gained earlier in the year. It is a battle between technological innovation and operational efficiency. Zooming into the first quarter of 2026, the volatility becomes even more apparent. We saw a massive run-up in January, with the stock hitting a 52-week high of $54.60 on January 22nd. Since that peak, the stock has been in a corrective phase, carving out a series of lower highs. On March 16th, there was a significant spike of over 7% that was completely given back by the end of the trading session. This long wick on the daily candle suggested that sellers were waiting at higher price levels to offload their positions. The Friday session on March 20th was particularly brutal, with a 5% drop that pushed the price down toward the $44 mark. This move coincided with reports of the Great Rotation, where investors shifted out of semiconductor darlings into other sectors. Currently, we are seeing a neutral RSI around 50, which suggests the stock is in a bit of a no-man's land between bullish and bearish control. The trailing P/E ratio is extremely high, which makes the stock sensitive to any news regarding earnings or revenue misses. Support at $42.50 is the next major level to watch on this daily time frame. If we fail to hold that, the next significant support doesn't appear until closer to $41. Conversely, the bulls need to reclaim the $47 level to show they are back in control. Resistance near the 50-day simple moving average has also been a major hurdle for this recovery attempt. We are watching to see if the recent partnership news can provide the floor needed for a rebound. The volume on the recent sell-off was elevated, which usually indicates institutional distribution. Switching over to the 1-hour chart, we can see the anatomy of the recent sell-off in more detail. The decline on Friday, March 20th, happened in a very structured way, with consistent selling pressure throughout the day. You can see how the price broke through short-term moving averages and failed to find a bounce until late in the session. This level near $43.87 has become a temporary floor that we are testing right now. The hourly MACD is showing a slightly bullish crossover, which could signal a short-term relief rally. However, the price remains capped by the Ichimoku Kijun resistance level at $45.60. Notice how the volume spiked during the initial drop on Friday, confirming the strength of that downward move. We are currently seeing some consolidation as the market digests news regarding the geopolitical landscape. The partnership with SoftBank on next-generation memory technology is a medium-term catalyst hourly traders are keeping an eye on. If the price can break above $45 on high volume, it could fill the gap created by Friday's drop. Short-term traders should look for a breakout above the 20-period moving average on this time frame. The rejection at the $46 level earlier last week was a clear warning sign for the bulls. It is important to watch how the stock behaves during the session today as it tries to reclaim lost ground. We are looking for any signs of buying exhaustion or renewed selling pressure near the EMA levels. The 1-hour chart helps us see the immediate supply and demand zones that are being contested right now. Now let's look at the 15-minute chart to see the intraday action from the last few trading days. You can see the sharp continuation downward on March 20th that defined the recent bearish sentiment. Today, March 23rd, we are seeing a bit of a recovery as the stock trades up by about 2% in the early hours. This bounce is currently testing the $45 level, which is a key psychological barrier for many traders. Intraday support has formed around $44.30, which matches today's earlier low. If the price stays above this 44.30 level, we might see a continuation toward the $46 resistance zone. The 15-minute time frame shows us that the buying today has been more gradual compared to the aggressive selling seen last week. We are also seeing a neutral to slightly bullish RSI on this short time frame as the stock attempts to find a new range. The news of Nordea and Danske Bank increasing their positions is likely providing some of the underlying bid we see today. Watch the volume in the final hour of trading, as that will tell us if institutions are truly buying the dip. A close above 45.20 today would be a very positive sign for a short-term trend reversal. On the other hand, if we fall back below $44, it would indicate that the bounce was just a dead cat bounce. Traders should be cautious of the fakeouts that often happen around these round number price levels. We are also seeing some correlation with Nvidia's price action, as Intel is now more closely tied to their AI ecosystem. Keep a close eye on these 15-minute candles for any sudden shifts in momentum as the day progresses. To recap, Intel is currently at a critical pivot point as we move through March 2026. Key support levels are at $42.50, with a deeper floor at $41.10. Resistance levels to watch are $47 and the recent high of $54.60. The bullish case is built on the Nvidia partnership, the new Core Ultra chips, and massive institutional buying. The bearish case focuses on high inventory, yield issues with the 18A process, and heavy competition from AMD. Short term, I believe a recovery to $47 is likely, with a 60% probability, provided $44 holds. This recovery would be reinforced by positive updates on the Malaysian packaging plant or stronger server demand. Long term, the outlook depends entirely on the foundry transformation and achieving break-even margins by 2027. If Intel can solve its yield issues, a move back toward $60 is possible by the end of the year. However, a break below $40 would be a major warning sign that the turnaround story is faltering. Watch for the upcoming earnings report on April 23rd, as it will be the next major catalyst for trend definition. Also, keep an eye on the broader market sentiment regarding interest rates and the potential late 2026 recession. Unbiasedly, the stock is currently in a consolidation phase within a larger structural uptrend. Traders should wait for a clear breakout or breakdown from the current range before taking large positions. Thank you for watching this in-depth analysis on Explain the Charts. Please remember that this video is for educational purposes only and is not financial advice. Always do your own research and consult with a professional before making any investment decisions. Stay tuned for more updates as the market continues to evolve.